The entire US stock market has come into the hard bullish condition. And it is because of the Dow Jones. Because last week Dow Jones not just breached the previous all-time high level, but has also closed above the previous all-time high level. And this is an indication of the bullishness, the technical bullishness. And that bullishness of the Dow Jones will help the S&P 500 to breach all-time high in the 7,500 to form a new all-time high. However, this bullishness comes with a risk because Dow Jones is in the overbought condition and this is happening after 8 or 9 months. And the same is seen in the S&P 500, and the S&P 500 is much more heavier as compared to the Dow Jones. Because now the stochastic RSI, the both of these, the channels K and D, are absolute 100 and are indicating heaviness and putting a downward pressure on the entire US stock market. And now everyone is talking about what happened in the year 2000, dot-com bubble burst, and then in the year 2008, the housing market bubble. And now there is an AI bubble. And last week also I have shown you the AI bubble through this, the chart of the Nasdaq. And to make the matter worse, the 30-year bond yield has reached to the levels which are not seen since 2008 financial crisis. But the question is, does all of this indicate an immediate fall? No. It does not indicate any immediate heavy fall, but technically a fall or a rise will depend on the closings in the Dow Jones and in the S&P 500. Because as long as the closings in the Dow Jones are above the previous all-time high level, it will remain bullish, it will remain heavily bullish. And as long as Dow Jones is holding bullish, there is no fear of any kind of fall. And for the S&P 500, it is all about the 7,400 psychological mark, as I have discussed in detail in my previous S&P 500 weekly technical analysis. And if you notice, Wednesday onwards, from the first or the second hour, we have seen continuous hourly closings above the 7,400. And because S&P 500 was holding strongly above the 7,400 on the hourly closing basis, this means that no matter what happens in the stock market, S&P 500 will now trade and sustain and will remain bullish. And it was not just about that the Wednesday, but the same was seen on Thursday, again the 7,400 and then the 742X level. And by Friday, there were more than 13 consecutive hourly closings above the 7,400 mark. This means bullishness. But now how the S&P 500 will be able to sustain and hold bullish even when there is heavy pressure through the technicals? What will trigger the fall? Or what will keep the S&P 500 bullish or heavily bullish? All of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of May 25th. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. And this will help you navigate through this S&P 500 technical analysis. In the first part, I will discuss the technicals, the chart, weekly chart and the daily chart, and the technical conditions which are supporting the bullish and at the same time are putting heavy pressure on the indices. Second part is the probable movement. In the probable movement section, I will tell you the conditions for the bullish and the bearish movement, the levels, the numbers, the support and resistance zones, and the flow of the index, whether it will first move up and then will come down, will hold, will come down or will move up, this kind of flow in the second part. So first I'm going to start with the technical part. Now guys, I'm going to discuss the technical part first, and here I will discuss the weekly and the daily chart. Weekly chart means the long-term picture, the long-term trend. And the good thing is that the long-term trend is still bullish or absolute bullish. Now there is a correction that Monday will be the holiday. That is why the week will start from May 26th. That will be Tuesday. So now let's first discuss the weekly chart. First comes the candle. Now, if you look into the candle, the closing open and the closing prices of the candle are above the open and the closing prices of the previous candle, indicating heavy bullishness. But because it failed to clear the all-time high of the previous candle, this means that there will be an initial or intraday bullish movement on Tuesday, but this does not confirm a gap up open on Tuesday. However, if you notice this last weekly candle of the Dow Jones, then this candle is very strong because the closing price of the candle is above the previous all-time high level, and this will then override everything, and this now indicates a gap up open on Tuesday or irrespective of any open and initial or intraday bullish movement on Tuesday. Now let's talk about the technical indicators, and now I will show you the problem, and also that why the S&P 500 and Dow Jones and the entire market will be able to move up. In terms of the technicals, S&P 500 is bullish through the Bollinger Bands, moving averages, and Ichimoku cloud on the weekly chart. And also the S&P 500 is bullish through the MACD and the stochastic RSI on the weekly chart. There is saturation, there is overbought and heavy divergence, right? Now, technically S&P 500 is 100% absolute bullish on the weekly chart, indicating that the long-term trend is still bullish. But because of the saturation and the overbought condition and the heavy divergence, there comes the problem. But before I discuss the problem, okay, let's cover the Dow Jones also. Dow Jones is also bullish through the Bollinger Bands, Ichimoku cloud and the moving averages on the weekly chart. And the Dow Jones is also bullish through the MACD and the stochastic RSI. And the Dow Jones is overbought on the weekly chart. Right, so Dow Jones is also 100% absolute bullish on the weekly chart, and the same goes to the Nasdaq. Now the problem. So the problem is actually through the overbought and the divergence. Now if you look here in this the chart of the S&P 500, okay, so you will notice that the S&P 500 has hit the overbought conditions and the heavy divergence. Furthermore, it is not just about overbought and this is the saturation. If you notice, this is the stochastic RSI, and the stochastic RSI has hit the K equal to D equal to 100 absolute saturation. Now this kind of absolute saturation is generally seen whenever there is some bullish reason. Technical, non-technical, doesn't matter. Whenever there is a strong bullish reason in the stock market, when the economy is doing well, earnings are good, then only we see this kind of K equal to D equal to 100 stochastic RSI in the S&P 500 and in the Dow Jones. Otherwise, we will not see this even for months. Okay, now this is happening. This means that something extraordinary is happening, because if you notice, the Middle East situation is still not good. There is still no clarity, and we are expecting that there will be some clarity this weekend. Okay, but still there is nothing from there. And one more thing, the rally that you are seeing here, this heavy bullish rally, it is based on speculation that the Middle East war is over and everything is good, economy is doing well, and oil is trading around 70 or the 60, and everything is going to be good and well, and there will be rate cuts. However, none of this is true. That is why I mentioned the AI bubble and the example of year 2000 and 2008. And now remember, in my previous S&P 500 weekly technical analysis also I mentioned, it will be the Nasdaq. Whenever this happens, whenever the bubble bursts, it will be the Nasdaq which is going to lose heavily. In 2008, Nasdaq lost around 74 or 75%. In 2000, Nasdaq lost around 82% of its value. But again, it comes with a condition that there must be a sharp recovery like this. So even if there is 80% loss whenever the bubble bursts, then whatever happens after that, when the things normalize, okay, in a year or so, then there will be a very heavy, very sharp recovery. And this recovery will be very heavy and very sharp, especially in the Nasdaq, because Nasdaq is going to lose the most. And this is the chart of the Dow Jones. Because the Dow Jones has gained and closed above the previous all-time high level, that is why technically it is allowed to move up and to remain bullish. But again, the problem is same. Dow Jones is overbought and is saturated, and this is happening after 8 or 9 months. This means that even though the Dow Jones is allowed to move up, but it will remain under pressure and will remain heavily susceptible for a sharp and sudden fall, because it will have to come out of the overbought condition. Now, how soon we can expect this fall to happen, or if the S&P 500 will keep on moving up on Tuesday, Wednesday, Thursday or so, this will be more clear through the daily charts. So let's move on to the daily chart in order to get some clarity that how soon we can expect this fall or rise. So guys, now we are here and this is the daily chart. Now, daily chart means one candle represents one day. Okay, weekly chart means one candle means 1 week. Okay. Now, let's first discuss the candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. Now, let's first discuss the candle. This candle formed on Friday, 22nd of May. What we can see here is that S&P 500 opened and closed above the previous open and the closings. However, there was heavy intraday retrace. Furthermore, this is not good because on the same day, on 22nd of May, the S&P 500 moved into the 7,500 range and the high was 7506.72. And you can notice here that I mentioned in this my first update that if the S&P 500 moves up and tests the 7,500, okay, then also it will remain up to 750x and a new all-time high is not expected on that day, on Friday, in the S&P 500. And what we have seen here, the high was 7506. Anyways, all of this indicates that there will be an initial or intraday bullish movement on Tuesday, but a gap up open cannot be confirmed, right? Now let's get the second opinion, the confirmation through the Dow Jones. This is the last daily candle of the Dow Jones formed on 22nd of May, Friday. The most important part of this, the candle, okay, not just one, but there are two. The first one is the open equal to low condition. It managed to sustain within the open equal to low condition. Okay, this was the good thing. But other than that, the closing of the Dow Jones was above the previous all-time high level. Okay, now both of these conditions are indicating heavy bullishness, means a gap up open on Tuesday, or irrespective of any open and initial or intraday bullish movement on Tuesday. Now let's analyze the technical indicators and let's see if the pressure is still there on the S&P 500 and the Dow Jones on the daily chart or not. Okay, because if there is no pressure through the daily chart, in that case the indices will be allowed to move up, right? So now in terms of the technicals, S&P 500 is bullish through the moving average, Bollinger Band, Ichimoku cloud on the daily chart. However, S&P 500 is bearish through the MACD on the daily chart and is bullish through the stochastic RSI. There is no overbought or any such condition, but yes, S&P 500 is hitting the saturation on the daily chart. So in this manner, the S&P 500 will be considered as 75% bullish on the daily chart. And what we have seen on the weekly chart, that S&P 500 was 100% absolute bullish. Okay. Now the Dow Jones. Well, if you notice, the Dow Jones is almost also okay, the same. The Dow Jones is bullish through the moving averages, Ichimoku cloud and the Bollinger Bands on the daily chart, and the Dow Jones is bullish through the MACD on the daily chart and is also bullish through the stochastic RSI on the daily chart. It has neither hit the saturation nor any other like overbought or anything. Dow Jones is 100% absolute bullish on the daily chart. And now there is a magic. This magic is in the MACD of the Dow Jones. Okay, if you notice, there is a bullish crossover in the MACD. For last many days, the Dow Jones was struggling to sustain and hold. Then it turned bearish. It was supposed to remain bearish. Okay, but the movement on Wednesday, Thursday, and Friday. Okay, this movement in the Dow Jones was primarily because of the Goldman Sachs. Okay, and Caterpillar, but primarily it was the Goldman Sachs. And Goldman Sachs, we all know that whenever the manipulation happens in the stock market, okay, then almost every time or most of the times the Goldman Sachs stock is involved. And why the Goldman Sachs? Because Goldman Sachs is the primary contributor to the Dow Jones, is the heavyweight to the Dow Jones. It is clear that Dow Jones has turned absolute bullish on the daily chart. Dow Jones is already 100% absolute bullish on the weekly chart. This means that now it is only the Dow Jones which is going to help the S&P 500 and the Nasdaq. Okay, but at the same time, the pressure is through the weekly chart of the Dow Jones and also through the weekly chart of the S&P 500. Okay, on the daily chart, the pressure is only in the S&P 500 and also through the Nasdaq. Means only the tech indices are under pressure because of the heavy saturation and the overbought condition. The overbought condition is in the Nasdaq, not in the S&P 500. And S&P 500 is only the saturation. In the saturation, this is the condition. Okay. Now, but again, the question is that why and how the S&P 500 will be able to sustain. Okay. And for that, we need to know that the Dow Jones. It is actually the Dow Jones which is going to help the S&P 500 to sustain. And even if S&P 500 comes under pressure, then also S&P 500 is in a condition to sustain at the within the 7,400 range, at the 7,400 4x, very heavy support level. And if the fall accelerates, then also the 7,400 psychological mark is very strong, because for last 3 days, okay, there are almost 20 consecutive, 20 successive hourly closings above the 7,400. That is why whenever there will be a condition that S&P 500 has to lose the 7,400, then what will happen? Then in that case, S&P 500 will come down to the 7,400, will lose the 7,400 a little to the 7,309x, and then will recover back the 7,400. So now I will discuss, okay, this condition for the 7,400, for the 7,500, okay, and a condition that can trigger a sharp or very heavy fall to back to the 7,100 range. So now let's move on to the next section, that is the probable movement section. But guys, before that, I have this important information to share with you, that if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you join my Patreon community, then along with these the daily precise updates, you will also get the opportunities in the premium stocks of the US stock market, and also the midweek update, and it's a video technical analysis posted every Wednesday. And when you use that link that I have shared in the description and also in the comment section to join my Patreon community, then you will see that this is my Patreon page, and this is my Patreon profile. And here through this, the membership option, this is the button, you will see that there are the 3 levels. And when you join my Patreon community, then you won't be alone, because many people have joined my Patreon community for last many days, weeks, months and years, and they are getting these daily precise updates every day from Monday through Friday, as well as the opportunities in the premium stocks. Now guys, let's discuss the last section, the probable movement. Probable movement means what is expected to happen in the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire US stock market in the coming week, the week of May 26th. And once again, May 25th is the holiday. So now, first, some important things. Okay, only on Thursday the inflation data will be released. That is the only news. Okay, important news for the next week. Now, recently we have seen that when the inflation data, whenever the inflation data was released and that inflation data was negative, the Wall Street has discarded that negative data. Okay, this means chances are good that when this inflation data is released in the next week, and again if we see that inflation is moving up, it is rising up, then also the Wall Street may discard the inflation data. But before that, the most important thing that is expected to happen is this weekend. In this weekend, we are expecting something concrete to come out of the Middle East, the US-Iran war. Okay, now based on the outcome, if the outcome is negative, then there will be the fall. If the outcome is good, like extension to the ceasefire or something like that, or permanent ceasefire or something like that, in that case there will be the rise, the bullish movement. Okay, so these are the economic factors and the news, and these are things. Okay, now in terms of the technicals and in terms of the numbers, what we know is that because of the condition in the Dow Jones, what condition? The condition in the Dow Jones, that the Dow Jones has given a closing, okay, a closing above the previous all-time high, breached and closed above the previous all-time high. We are expecting bullishness on Tuesday, either a gap up open on Tuesday, or irrespective of any open and initial or intraday bullish movement on Tuesday, no matter what. Okay, yes, the weekend situation, the confirmation from the Middle East will influence. If the outcome is negative, then this will not work, then there will be the fall. If the outcome is positive, in that case there is already the bullishness, then this positive outcome will increase the bullishness, will help the entire US stock market to move up heavily. Okay, now for the Dow Jones, okay, this will be to the 51,000 and to the 52,000 level. Okay, but for the S&P 500, and I'm considering a bullish case, for the S&P 500, no bullishness is allowed, no bullishness will happen until and unless S&P 500 gives a daily closing above the previous all-time high, or the current all-time high, that is 7517. Only when there is a closing above the current all-time high, the S&P 500 will come into the condition to move deep into the 7500 or to even try for the 7600. Okay, that is also possible, provided, see, technically this is not possible, but this is possible only because of the news from the Middle East. If there is a positive outcome, then only this will be possible. Okay, now one more thing we must understand. This is the 30-year bond yield, right? This is the week on Friday. Friday is 29th of May. Then Saturday 30th of May, and the May month is of 31st. So Sunday will be 31st of May. This means by 29th of May, if the 30-year bond yield closes above any of these two, okay, in that case nothing will matter at all. The stock market will have to come down. It will automatically be in a condition to come down. Why? If you notice this movement, okay, when the 30-year bond yield, okay, it was moving up and up, that time it was August, September, October, okay, it was moving up. And if you notice, the movement in the stock market was bearish, or stock market was under pressure at that time. Then what we have seen that the second, and see, this is the monthly chart, okay, monthly chart, one candle means 1 month. Then in the month of November, we have seen that the 30-year bond yield declined heavily and sharply, and there was a counter movement in the stock market. We have seen a rally, in the heavy bullish rally in the entire US stock market and also in the global stock markets, right? Now why this happened? This happened because in the month of October, okay, in that the FOMC, the Federal Reserve Chairman and the Feds have said that now, before that there were the rate hikes, okay, then there was a pause, then he said that now we are done. Now either there will be a pause, or there will be a rate cut, okay, these will be the two conditions, but no rate hike. This has triggered the fall in the bond yield, and then this triggered a heavy bullish rally in the stock market. However, this time it is different. Why this time it is different? Okay, why we are not expecting a relief? For that, look into this chart. Okay, this is the tool through which, okay, we see that what will be the expected interest rate, okay, in the coming months or years. Earlier I used to show, if you have subscribed to my YouTube channel, I used to show for the 9th of December 2026 the FOMC, okay, and what we have seen, okay, in my previous video in the technical analysis, that earlier, okay, 1 month ago, what we have seen that for 9th of December 2026 there were only this, that either there will be, most likely there will be a pause. Most likely for the entire year there will be a pause. The current target rate is 353.75. This is 353.75. Okay, a pause, and there were like 10%, 5 to 10% chances of a rate hike. That was for 9th of December 2026 FOMC meeting. Now this is for 9th of June 2027. Why 9th of June 2027? I have chosen this date because now we are in the month of May. Okay, next FOMC meeting is in the month of June. So now there are 12 months, 1 year. What we are seeing here, current target rate is 353.75. This is the current target rate. What the hedge funds, the market participants, okay, and everyone, the big ones who actually run the stock market, who move the stock market, what they are expecting, they are saying that now there will be no rate cut, okay, and either there will be a pause. Chances of the pause are 17%. Earlier it used to be 90%, 85%. It has declined sharply to 70%. Remember, I am talking about 9th of June 2027. Okay, chances of a rate hike 25 basis point are 34.7%. 2 rate hikes 29.7%. 3 rate hikes, okay, means not 2 or 3, 75 bps 13%. Even a full 100 basis point rate hike are 3.9%. Okay, this is what the market movers, market manipulators, market hedge funds, they are expecting, they are anticipating. This means that economic situation is going to turn worse. Okay, not good, worse. This means that now there are Tuesday, Wednesday, Thursday and Friday, only 4 days for the stock market to move up and to continue to move up, and for the S&P 500 to even hit the 7,600 if it really wants to hit. I was discussing the bullish condition. The bullish condition means the 7517 is the mark. S&P 500 must move up, must give a daily closing above the 7,517. At the same time, Dow Jones must also remains and sustain and close above its previous all-time high, no matter what. Because if Dow Jones loses and gives a closing below previous all-time high, then S&P 500 will automatically come under the pressure. Now the pressure. Okay, on the weekly chart of the S&P 500 and the Dow Jones, okay, I've shown you what the saturation, heavy saturation that we are seeing after almost like 1 year or 1.5 years. Okay, the same is seen in the Dow Jones. Okay, and by default this situation is there in the Nasdaq, right? All of the indices are heavily overbought, heavily saturated. So it just need a reason. Reason for what? Reason for to move up and not to come down. Because to come down, there are automatically, by default, there are reasons that it has to come down. Okay, but it needs reasons to move up. For the S&P 500 and Dow Jones to move up, now it is clear that the 7517 in the S&P 500 and the previous all-time high 50,512.79 in the Dow Jones, right? This must happen and this must continuously happen, otherwise there will be a problem. What if the Dow Jones fails? Dow Jones fails to hold and gives a closing below its previous all-time high. In that case, S&P 500 will automatically fail. Okay, this failure does not mean S&P 500 is going to lose. Why? Because now there are the 7,400 4x level and the 7,400 psychological mark. Exactly what I mentioned in these the daily updates. Okay, 7,400 4x level, okay, and the 7,400 psychological mark will not allow the S&P 500 to come down, will not allow the fall to happen in the S&P 500. Doesn't matter whether there is a news or not. Doesn't matter whether what the technicals are saying. Okay, for now any fall, because on Friday Dow Jones S&P 500 closed at 7473.48. Okay, so for now any fall will initially be limited to the 7,400 4x level. Okay, however, still if there comes the pressure, then the 7,400 psychological mark, and this is how much? This is 1% fall to happen for the S&P 500 to hit the 7,400. Furthermore, not just about the 7,400, it is also about the 7,400 739x. Okay, what matters here is the hourly closings. For now, there are 20 continuous hourly closings above the 7,400 psychological mark, and there are 7 hourly closings above the 7,400 4x. This means that these two levels are very, very heavy support. Okay, that is why whenever there comes a condition when the S&P 500 has to lose and there is a pressure on the S&P 500, in that case these two levels will be able to hold the fall, will be able to support the S&P 500. But this fall does not mean that this is an opportunity to buy. You must be very careful when it comes down. Okay, yes, it will give you an opportunity to buy, provided it is not losing. Secondly, if you are buying here, then you must use the stop loss. Now there is one more, this is the bullish condition. Okay, this bullish condition says that as long as the S&P 500 is holding above the 7,400 4x level, it will remain highly and heavily susceptible or in a condition to test the 7,500 and to recover the 7,500. Okay, now even if it fails to breach, or it breaches, the S&P 500 breaches but sustains and but fails to sustain above the previous all-time high or the current all-time high, that is 7517. However, it has closed above the 7,500. In that case, the next day it will be in a condition to move up and to close above the current all-time high 7517 and then to continue its bullish rally. But again, this bullish rally will not be able to move for long, will not be able to sustain for long, even if the S&P 500 is influenced by the Dow Jones. Okay, why? Because even if all of these bullish conditions are fulfilled, then also the S&P 500, because the K equal to D equal to 0, 100. Stochastic RSI is absolute saturation and absolute overbought condition. Okay, this will not allow the S&P 500 to move up. Any bullish movement, even 1 point bullish movement, means 7473.48 was the last closing. Any point, just 1 point bullish movement, okay, will trigger more heaviness, will trigger more overbought condition and will make the S&P 500 unsustainable. This means even if the S&P 500 makes a new all-time high, then also it will remain highly and heavily susceptible for a sharp and sudden fall. That is why I mentioned that the index or the stock market needs the reasons to sustain bullish, because by default technically it is under pressure to come down to cool down the technicals. So reasons are needed to sustain bullish, right? Now again, there comes the 7400. Once the S&P 500 loses the 7400, we need 2 consecutive hourly closings below the 7400 psychological mark. Once the S&P 500 loses the 7400, there are 2 consecutive hourly closings below the 7400. Then this will put more pressure on the S&P 500 to come down to the 7306X level. This is where the S&P 500 will find the support, but this will not be able to provide the absolute support. Why? If you notice this candle, okay, even this candle also, or this candle, when the S&P 500 was coming down on this day, on 19th of May, S&P 500 made an intraday low at approx 7,333, much lower than the 736X, because it was then attracted by the 732X level. 732X level was attracting the S&P 500 towards itself, and here this was very much clear. The 732X level is so strong that it will be able to hold the fall. This is why the S&P 500 for once can lose the 736X, but it will be in a condition it will be able to hold at the 732X no matter what. And yes, 732X level will be, or there is a zone around the 732X level, not just the 732X, but there is a zone around the 732X level, because you can see 7333 was the last price. Okay, it did not come down exactly to the 732X, but retraced from the 7333. So there is a zone, a good and a big zone around the 732X level, and this zone is strong enough to hold the S&P 500, to hold the fall and to trigger the bullishness in the S&P 500. The zone here, okay, this is a big zone. This will be considered as the point from where we can say buy the dips. Okay, because once the 732X is gone, then only the 722X level and the zone around the 722X level will be there, and the S&P 500 will be strongly attracted towards the level, and then there will be the fall. Okay, yes, before that there is a very strong, very small but strong support zone that will be able to hold the fall. But now the real question is, when the S&P 500 will be coming down, then where exactly, to what level exactly it will be coming down? Okay, where is the pending obligation? Okay, where it will be coming down? For that, you need to know there was some consolidation here. Okay, this was in the 7100 range. Okay, there is the 7101X. Okay, there is a good and big zone around the 7101X level, my calculated level. Okay, before that there is in the 7105X. Okay, So this is where whenever the S&P 500 comes down, okay, even if the situation is bad, or the 30-year bond yield, okay, there is a closing above the 30-year bond yield and the S&P 500 has to come down. Now it is confirmed, okay. Then also this is where the S&P 500 will be able to hold, and S&P 500 for now is not going to lose the 7,000 psychological mark. It will take some time. It is not going to lose the 7,000 psychological mark. Okay, this is very much clear. It will, for now, it will remain within the 7,000 range, because the loss of 7,000 psychological mark, 7,000, exact 7,000, the loss of 7,000 psychological mark, okay, will trigger the correction. See, as of now, from this, the all-time high, the 7,000 is what? 7,000 is 7%, approx 6.8% or 7%. That is fine. Okay. As long as S&P 500 is below 10% loss, means the loss is like 9.9%, 9.8%, okay, it will not enter into the correction. In order to enter into the correction, S&P 500 will have to lose the 10%. The 10%. Okay. This means that once the S&P 500 has lost the 7,000 psychological mark, in that case, S&P 500 will be forced, it will be compelled to lose 3% more, okay, and to reach near to the 10% mark, the correction mark. Okay, in that case, it will be in the 6,700 or 6,800, very near to the correction. And at that time, whatever will be there, okay, that then I will, inform you. I will mention, okay, in this the weekly technical analysis, and in these the daily precise updates, okay, every day, which I give to my Patreon community members. This means 7,500 psychological mark, bull side, then the all-time high 7,517 for more bullishness to happen. But any bullishness means more saturation, heavy overbought condition, means susceptible for a fall. Fall will be limited to 744x, then to the 7,400 psychological mark. Losing 7,400 means 732x, the zone, a big zone, that is around 732x. The fall will be handled there. Okay, then an opportunity to buy the dips. Loss of 732x, the zone around the 732x means the 7,202x. Okay, a good zone around the 7,202x. Again, an opportunity to buy. And the loss of 7,202x means to the finally to the 7,101x. But now there is one good thing. Okay, one good thing that is in favor of the stock market. What is that? That good thing is the short week. A short week, long weekend. Okay, Monday is the holiday, short week, 4 days. Okay, now if there comes something like a neutral or positive, okay, through this the Middle East condition, let's say there is ceasefire or so, okay, in that case, by default, the short week, because historically we have seen that more than 90% of the chances, because more than 90% of the times we have seen whenever there is a short week, like a week only for 3 days, means there are only 3 working days in the week or 4 days in a week, then most of the time, okay, it remains, the stock market remains and sustains bullish. Okay, but again, for that to happen, there must come some positive or neutral news from the Middle East. Otherwise, this will not happen. Why this will not happen? Again, the same problem. Heavy overbought and heavy saturation. Any kind of bullish movement will add more weight, will add more, okay, this kind of the situation, okay, then this will turn everything bad. So now on Tuesday in my pre-market analysis, okay, as per the expected open, I will tell you that whether there are chances for any new all-time high or not. If there are, then will it be sustainable, or it will simply form a profit booking condition through the first hourly candle, and then after a good gap up open, it will simply fall. All of that I will mention in my pre-market analysis on Tuesday to my Patreon community members. And then when the first hourly candle forms, then it will be clear whether there is any profit booking condition or not. Because on Tuesday, there are very heavy chances for the profit booking to happen. Why? Again, the same reason. The heavy overbought, okay, and these are conditions. So guys, if you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. And guys, hit like to appreciate if you like the video, the S&P 500 technical analysis. And if you have any questions that you want to ask, or if you have any suggestions to improve the technical analysis, my S&P 500 weekly technical analysis, then please do share through the comment section.